The thing you got to be most careful about, and it happens so often that it can be aggravating if we're not aware of it, and that's the stop run. It runs the stops before going down. It really does. And, you see it over and over and over. The opening of the day ran the stops up at the top before going down, and it'll head fake going down and then running the stops at the top part. And before it looks like it's going down, it's over and over. Let's take a look at just the most recent ones here. And I was thinking about taking this short, and I used to just want to jump in when it's breaking down. And sometimes if you can time it right, that's good. But it ran the stops before it went down. Let's check it out. Right here. The stops are up here. The stops are up here. So what it do, it head faked a sell-off, came back up, stopped them out here, and now it's going down. That's a typical pattern. The best way, in my opinion, is to learn how to trade it when it comes up here and starts to break down again. See, this is a failed second high, and we're told in the ICT videos that when it makes a failed higher high here, the best place to trade it is when it breaks down and comes up to this pivot. Look at that. That's the entry point right there. That is the entry point. Man, gotta get that. Gotta get that. That is the best entry point. Okay, let's take a look over here. Well, we can see it over and over. This up and down movement here. Down, failed to go higher, came down, went back up there. Very close to that breaker. Let's take a look at that just to zoom in on that and make sure that we're seeing this right. Different areas that this takes place. Right here it did. It went high. Actually, a lot of things are happening right here. A lot of different things are happening right here. You get kind of a breaker block situation where it flushes up, comes down and displaces, and it created a fair value gap, which is exactly where price pulled into to come down. And then you could also consider this a higher high here and a failed higher high here in this area. And here's the pivots. And when price broke down, it came right up to it on this pintail here, right underneath those pivot lows there. The price shot up right underneath that and went down nicely. Those are the kinds of trades I need to get better at. The failed higher high displacement breakdown. That's what I got to get better at for sure. All right, I want to record this. On the 5-minute chart, the MNQs, futures, it's about to break a low here. I want to see how it works, price action. There's a 15-minute chart, 30-minute chart. It's about to break through, and here's the 5-minute chart. I really want to study the candles. I'm looking for a 2-wick or 2-candle pierce. I don't want to just jump on the very first thing it goes through. I want to see it go through, come back up, go through it again, and kind of pause. There's the first one, and that may be all it does, but that's not how I want to enter this. I don't want to just jump in it. Sometimes, that's all it's going to do is poke through one time like that. And sometimes that's the best. There's a second attempt. It looked like it dipped under it twice. That's kind of the minimum of what I'm looking for. At the closer it gets to that pintail at the bottom, is where my stop is going to be. My stop is going to be right at the bottom of this. Here's the second candle. See if it goes down on the second candle. These are 1-minute candles. And if it goes near the pintail bottom of that previous candle, then that's where I want to try the trade. What I wanted to do is I wanted to come near that other candle. So let's see what this looks like. I want this candle to come down close to this candle. That's my stop loss. That's my entry. If I can get that to work. That's the best setup for me, because I can limit my risk very, very tight for a very massive reward. But it's got to be set up that way. That's the way I want to take these trades in the future. I used to just jump on the candle like this, and sometimes it works, and other times you just get hit, and it ends up being the biggest loss for the month, because you can't figure out. You try to, then it gets you into the revenge trading mode, and I don't want to do that. So I think I'm going to limit my attempts in this kind of trading here, turtle soup trading, whatever you call it, and is to use a two candle format, where one candle is the stop loss, the other candle is the entry. I'm still going to wait and see what happens here. I might get the trade after all, but I'm just going to wait patiently for that. I almost did it. That was a good opportunity right there. It keeps giving me a chance to get in, and I need to get the confidence to just push the button. I got my stop loss 10 ticks away. It's not that big a deal. So I just need to get, once it goes below, you know what? I could have just simply put my order in and had it grab me. This is exactly the strategy, though. This was my stop loss candle right here. And this candle coming down is my entry candle. And I'm starting to already move my stop to break even and possibly trail it up for a profit already at this point. There's a third poke to the bottom. So I think it's going to break down, but there sure is a lot of scalping opportunities right here. And I just need to get better and better at this. And a lot of it's because I'm new to the idea. I'm really trying to hone in on the exact rules of this trade for myself. I'm really creating it as I go. I just thought of the two candle or 2-wick entry today, actually. And I'm observing it for the first time as a standard entry process for myself. And I like what I see. So if this is the way the model plays out, and this is exactly the entry structure that I need for the entry, this is the setup that I need, the structure that I need, this is going to be one of my favorite plays. But it has to be just like this. And like I said, this is the first time I thought of it today. 2 candle or 2-wick entries. First candle is the stop loss. The other one that comes down near that is your entry candle. Could have entered in literally right here. And how much of a stop loss is that? It's 51.25. At the most, it's a 4 points stop loss, right? 4-point stop loss. And, you got 5-to-1 return on it already. 5-to-1 return's pretty good. Or I could have done a 4-point. Let's see if I got in there. Let's see if I even got up higher. Let's say I got in at 17,452. 17,452. Let's say 17. There's that. That's still 4 points. That's not too bad considering you can get, let's see, 52 all the way up to, oh, we're almost at 72. That's 20 points. 4-point stop loss, 20-point return. That's 5R return. I like this. I hope that I can master this as one of my playbook trades. Now, I got to admit, when others were talking about this going long here, let's take a look at the 5-minute chart when it broke out. And it could have been profitable to some degree on various scalping techniques right here when it broke out to the upside, swept the highs over here. All it did was go into the 15-minute fair value gap, as we can see right here. If we take a look at that, where did it go? Where is the 15? That's the 30-minute. 15-minute fair value gap right there. You can see came up into this box where there's a fair value gap right there. So I'm looking for it to continue to go down. It just went up to sweep the highs and went here to sweep the lows. It's been sweeping back and forth, and then that usually indicates it's going to make a move. Yeah, well, obviously it's going to make a move in one direction or another, but I was looking for it to break down right here, creating a failed swing high, which is like what we learn on ICT. If there's a breakout here and it comes down and it fails to go higher, it's a failed swing high, usually the breakdown will retreat back to these pivots. It didn't quite come up there for me. It didn't come up there unless you count this candle's wick right here, but it went up so far. I'm not sure I would have been confident in taking that. So it didn't work the way I wanted. So, shorting right here in this area, but you did get a lot of testing in this area. I just don't see any fair value gaps on the 1 minute chart anyway. Let's look at the 5 minute chart. Yeah, it looks like there was one. If I wasn't in the kitchen and I was drawing this out, preparing for this, I would have noticed that. But you see the top of the fair value box goes all the way up to the pivots, and I would have wanted it to come up more. It did go almost halfway into that. So it's hard to say if I would have taken that trade or not if I was sitting here. A lot of times I like it to go up to the pivots to the top of the box, and it just might have not come up high enough for me. So we're waiting and waiting for another trade opportunity. This really looks like it wants to break down. Now I'm not sure I trust it down here with the 2 pintail trade that I have. And it was the time to strike on that was down here. The first time it touched. Now it's the second time with a lower consolidation period. I definitely think it's probably going to push lower this time. I mean, if it does just come and test and give us some buy up opportunities, and it's possible, but I'm not as confident in that as I was over here the first time it touches it. Now we'll see what happens though. Let's keep